So I've done a video before about how investing in the stock market changed my life and how it could change yours. I also did another video in which I talked about how you could make your income go far by investing in the stock market and benefiting from the compounding returns. So today I have a real life example of someone who did just that, and we're gonna go through his experience, how it started, and how it's going, whether he would continue, and whether he would recommend it to someone. So before we dive into today's video, I want to just say that nothing in this video is financial advice and it's for entertainment purposes only. So Saad, you are 28 years old.
Yeah.
And you invested in the stock market for the first time
About a year and a half ago, like properly, like actually
okay.
Educated investment, what I would like to call it, right? Previously there were trades made, but it was just off of this person's view or that person's view. It wasn't something that was, projected to actually like help grow, and there was like reasoning behind any trades.
And what assets were you trading before you took it a bit more
So I
seriously?
think I've done it kind of periodically, right? Where in 2016-ish, I played around with like Amazon, JD.
Okay.
So a few stocks here and there, like a few that I was hearing about. And then that didn't really scale out to be proper. So pulled out of that, and I think it was like $7,500 tops.
And that was when? 2016?
2016.
So around 8 years ago?
Exactly.
So you were like around 20?
Yeah. Perfect
And,
age.
like you were a student at that time?
Yeah.
Okay.
At the time I'm studying. So then it went from there to like 2020, where it was trying out the whole Dogecoin rush and trying to see, whether or not I can make something out of it. But then a year and a half ago, funny enough, based off of your advice, I'm getting paid to say this. Based off of your advice, no, it was, I went in, but then buying the right things. And
Was it financial advice?
It was
entertainment.
It was
I was
entertainment.
entertaining you.
You were entertaining me, but I started laughing, and I started, I set up an account and started trading. Just laughed my way through it.
Well, were you trading or investing?
Investing.
Okay, so
Investing.
not like day trading,
No,
buying
no.
and selling. Okay.
Investing.
At what age would you say you started like earning an income? Like earning an actual
About
income?
21, 22.
Okay, so when you played around with Amazon, JD, it was like just whatever pocket money.
Yeah,
sort of
or
thing.
like side hustles and
Yeah.
stuff. Yeah.
Okay, and then 21 to like 26-ish, you were earning an income and never investing it.
Exactly.
Okay.
Right. It was like either it was all spent or the income wasn't enough. Yeah, it was pretty much always all spent. So you're living from paycheck to paycheck. I did have savings at the time, but then even the savings, there's no compounding happening there, right? So it's just a little bit of money, just.
Like best case scenario, you gain like some bit of interest on it. Or
No,
something.
not even, because
Yeah.
the account that we were putting it in, right,
Yeah.
Islamically,
Yeah.
the whole interest conversation. So there was no interest, so it's just like cash just staying there, and due to inflation, it's actually dipping down.
Yeah. And so basically you have like whatever money in your savings and you're seeing the costs of goods and services going up.
Exactly.
And you just have this money that's not gaining value or anything.
And then also for me, it was, I used to enjoy spending, right? So
As anyone
as
who's
like
in their 20s would.
exactly. So you're buying the wrong purchases,
Shoes and clothes
impulsive
and phones
shopping,
and,
exactly, right?
unnecessary things, right?
Things that you could live without,
Yeah.
right? These are all of your wants, whether it may be entertainment, clothing, whatever that may be. Would you be able to find a basic version of this that meets the requirements for that's necessary?
So back to the thing where you're saying that either it was being spent or wasn't enough income. The point I'm trying to make, or I was trying to make in like the previous video, is that regardless of what income you have, even if it was like a really low income, you always find a way to spend on things that you don't need, right?
Exactly. I mean, anyone who's gone from a certain salaries to like 5% up, 10% up, they think, okay, if I make 10% more, I will be able to take that 10% and like save it. But in reality,
You
when
upgrade your lifestyle 10%.
Exactly.
More than 10%, in fact.
you would probably be hitting at 20% and you actually get 10%. So now you're playing catch up again. You're going paycheck to paycheck. And because of all of these fintech solutions and stuff, and you have your whole buy now, pay later models and stuff,
Yeah, they
it's
rope
making
you in.
this, it's making it so much easier for you to just keep on spending, right? So
Yeah.
now you're not even, not only are you not going to earn more, but you're going to be spending twice as much as you did at your previous bracket. So aren't you, like, you know?
And the amount of, which I also talked about in a previous video, the amount of lending
You
that
gotta watch
you
the
are.
previous video. You have to watch the previous video because I feel like
It's like many videos, but as in the
Watch them all.
amount of lending that you're given access to increases so vastly with your earning. Like, you know, if you're earning like 1,000, you can spend like, let's say 5,000. If you're earning 5,000, you can spend like 20,000.
Exactly,
It's like you
right?
can just spend like
and
so
that's
much
what,
more
and,
credit.
and then when you're living in countries like the Middle East where everyone's flaunting a certain lifestyle,
keeping up with the Joneses.
exactly, right?
I
So,
don't actually know who the Joneses are. I just know this is a saying.
yeah, I haven't heard that before.
Yeah, I have. I need to find out who the Joneses are.
But no, exactly. Like that's the thing, right? So you might be needing you think, okay, I'm getting another $1,000 on top of what I made yesterday. So let me finance a Benz or something. You know, you're trying to be a certain way. And it's crazy because if you think a little bit about it, in reality, you only have, like, all the rich people and stuff that you have, the wealthy people, so-called, with the 1% wealth of the world, like the 1% wealth holders of the world, they are very basic people, right? And it is because in reality, like, that's all they need, and they're focused on their needs.
And from like when you started working, like you started your career or something from, let's say, 21 to 26, like your earning would have fluctuated. It would have probably gone up or down or whatever over this time, but it wouldn't, like, did it make a difference? Like, you would always just be at the same level, right?
Exactly.
It would always be spent or the same amount being saved, sort of thing.
Exactly. The same percentage.
Yeah.
So at the end of the day, I'm not gaining or losing any more or less by being able to be in this position, right? And then generally you're working harder than you would be previously, right? Because you're working for more, or even the other way, you're taking more responsibility, whatever that might mean. At the end of the day, is there really a point if I'm not going to be making more? And then when you think about countries like the UK and stuff, irrespective of whether or not you can control it, you will be taxed, which then increases you're put into the same situation.
And when you're in this period of, like, let's say you're spending whatever you earn pretty much, did you feel like what you're spending your money on is, like, worth it? Like, do you feel like, yeah, I'm not making much, like, I'm not saving much, but I'm living a great lifestyle?
No.
Because usually a lot of what I've seen from a lot of people who I've spoken to about, like, budgeting or something like that is a lot of the money that's being spent is usually on like small things, just like food, random clothes. It's not like they're buying like houses and cars and luxury lifestyles or something. I mean, obviously it would vary if you're like in high income kind of levels, but in like regular sort of earning levels, it's not really like like what I've seen is many people just don't have anything to show for it, for what they've been spending their money on. So they've been working
I
a
think
job for like this many years, and if they lose the job, it's like that's it. They just have nothing.
Exactly.
There's no asset they could sell or live
100%.
off or benefit from dividends or rental income or anything like that.
And that's the biggest problem, right? Like you now
Spending on liabilities instead of assets.
100%.
So what made this shift for you that made you just like how did it start and like
So
how's
for me, it
going?
was like, okay, is there a possibility where I can put my money away and not spend, so then I'm saving in a way, and then I'm just like, okay, I'll do it with a bank, so I set up another bank account. And even though I set up another bank account, it's just a different, a different tap on your Apple Wallet at the end of the day, right? You still have access to the same funds, and you have quick access, right?
Which is an important point.
Which is an important point, because if you are buying impulsively, which a lot of times when it's wants, you might take a rash decision. You want to almost make sure that you don't have access to capital to spend on those purchases, right? So that's where it started. And then I took some advice of, okay, if you are someone who doesn't really know enough about it, how do you then, navigate the whole situation? And it comes down to you can use resources like YouTube. There's multiple like resources on you have like Reddit, Quora, you have those formats. Everyone's talking about it. And then even when you're on these brokerage...
Did they tell you to buy Dogecoin?
No, they did.
Okay.
Right? Somebody had to.
So you have to obviously be careful where you're going.
Validate
and
the
check,
information.
are these reliable sources?
Yeah.
And the Reddit thing who told you to buy Dogecoin or whatever is one thing, and then on the other hand you have actual scammers and pump and dumps and
exactly
like people who are much more like financially trading savvy than you, who know exactly how everything works, and they can just flash numbers in front of you and you'll just go for it.
So validating your source, right, is a very important point, because if a lot of people are saying a lot of things and it's not really all verified information, but at the same time it's available information, right? So you might be able to search on Google and a scammer might pop up with a get quick rich scheme of like my maid.
Get rich quick scheme.
Get rich quick scheme.
Get quick rich scream.
Oof. Get rich quick? Yeah.
Yeah, you said get quick rich scream or something.
No, so you have all of those like weird scamming pop-ups and stuff too. My maid made $300 in 2 minutes.
I mean that is targeting like retired people. Like
but you don't know.
80s.
But that's the thing, when you're not informed.
But I'm talking about like the influencers, the finfluencers, the people with the Lamborghinis and the designer clothes and Rolexes.
All the
like
rented items,
Yeah. And well, maybe not rented, maybe because they have made money off people's backs.
Yeah, because there's a lot of like pyramid schemes running and stuff. So you need to always validate. And so when it comes to validating, there's two
and
ways
even
you can do
in
it.
validating, it's like Bernie Madoff, for example. Like he
was credible.
Like, he was a credible guy. Like top people who know everything.
I don't think Bernie Madoff
trust him.
Kind of things happen anymore.
Yeah, I mean that is like an extreme example, but there are things like that. So just because someone is verified on Instagram with a blue tick, or just because someone is a famous singer or celebrity who you like, doesn't mean that they're not going to try to scam you.
Exactly. So then there's two ways of doing it. Either you have a close source that you could trust within your family, friends, relatives, whatever. So you either have that, or you have on these brokerage apps and stuff that you can use to trade today as a normal consumer. You can copy people's trades,
like
right?
on eToro.
Exactly. So on eToro, you have certain rankings based off of how much percentage profit you've made over the years to show your credibility, on the basis of which you can then apply that to those
But then
trades.
also it's important that if you try to copy someone's portfolio, it's also important to like assess your own situation, because someone might be making great gains, by making risky trades or investments that they can afford to make. And just because that's how they're doing on eToro doesn't mean that's their entire portfolio. Maybe someone has like 90% of their assets in real estate and other stuff, and they just play around with a little bit on eToro.
100%.
And you are going and taking your life savings and copying them, and for them it's just like, oh yeah, it's double or nothing. But for you, this is like, you can't pay rent if something goes wrong.
And I think that's a great point, right? Because you have situations where you can't really see all of that, right? So when you are copying those trades, and also see like what those companies are, right? Like never trust blindly on the basis of, okay, he said that, or he has that track record, so he's always right? Do your own research. Like, I currently don't do stocks myself, right? I have someone who helps me do it. No, so for that, right, you get tips and stuff from the people that are close to you, and use them and leverage them to ask for advice, see what they're trading in currently. They might have heard of something. And it's not
advice. If they're not financial advisors, it's not advice.
There's something. I really want to know what this whole... So I use tips from like close friends and family when I was first starting, and then what I started doing was obviously like...
And on what basis did you take tips from them? Did they do well in their own portfolio? Or
they not only did well, but they were actively involved in trading, and they were investing quite heavily. So that for me, if there's someone who is telling me about something, I would want to make sure that they're also have put your money where your mouth is.
You always have to do your due diligence as well. So you made like another bank account, and it was a savings account, but it was liquid.
Didn't work exactly.
Yeah, and then you moved to an actual stock portfolio.
Yeah. So
these were long-term holdings, like not like
most of them. I would say I started like,
and
the thing is, obviously it depends on how much you make, but for me, it wasn't like a large amount that I was able to put in after expenses. But still, at least whatever that percentage was for savings could go in, and slowly that started to grow, right? So it was essentially a savings account for me, which then saw returns based off of the market growing, which generally year on year, I think for the past at least 30 years, 40 years, the market has grown year on year, irrespective, like on every decade.
Like overall, on this
exactly.
10-year period or something.
It's
like it's had in the middle like dips and whatever, but
generally
overall
it's up. Like 10 years ago, if I put in $1,000, today I would make profit on that $10,000 on that $1,000. So that started happening, and now, so a year and a half in, my advice. I can't say advice, man. Right? Would I recommend it to a friend? The answer is yes, especially when early on in your career. I have the regret that, if I did it maybe when I hit 21, it would be 9 years worth of, compounding returns.
Yeah.
But
And the younger you are, the more valuable your money is. Because you have less responsibilities.
Exactly.
And you will have more responsibilities later on. Like, even if you're like planning to not have kids or something, you're gonna still have more responsibilities.
Exactly.
So when you are young, or when you are at any stage where you don't have too many responsibilities, it's great to just go like as hard as you can, So then when you do have responsibilities, you already have that piggy bank.
And I think it comes also down to, like, if you have from your first paycheck a set amount of percentages allocated to each one of your expense types. So I will spend 40% on my needs, like rent, electricity, whatever that might be. And then I'll spend another 40 on my wants, which shouldn't be the case, right? It should be maybe like 30.
I think the general rule is like 50,
80,
30,
yeah.
20.
I think it's very important that you set a certain percentage to your first paycheck, and that's how you kind of allocate expenses for the month. So it's usually 50% for your expenses.
Like the needs, the basic needs that you
have to. Yeah. And then there's the whole...
50, 30, 20 rule. So 30 for your wants.
Yeah.
And 20 for your like savings. But is this is like a very general rule that should be able to suit like everyone, but
In most
ideally
cases.
if you're younger, like,
Put in more.
it's better in my opinion to like get that 20 up, like increase the amount that you're putting
Because
into savings.
You also won't have 50%
Yeah.
in expenses.
I mean, we don't know everyone's situation, but
Yeah.
like
But you don't.
many people don't. Yeah. So whatever your situation is, if you can't, then that's different.
Yeah.
But you do what
The
you
important
can.
thing,
Yeah.
right? The key thing here is that you make sure that these percentages are consistent throughout the entire rest of your career for the next like 5 years, 10 years, based off of again your situation, because what you will not be able to control, and what we were talking about earlier, is when you increase your income, you're also increasing your expenses, right? So in reality, you'll just be going up like this, and you're just spending whatever you're making. But in this situation, you are having those savings increase, right? Because your paycheck will increase as well. So those percentages make it a little bit easier to actually see that increase.
And now that you have been investing it's only been a year and a half, which is not a long time.
Yeah.
But do you feel like now, for this year and a half that you worked, you have something to show for it?
Yeah, for sure. I think it's been decent. Like, it's not negative, right, in terms of returns or the balance.
It could be negative though, like especially in a
But
1.5 year period.
Yeah.
But it
But I'm
doesn't
glad
mean
that it's
that
not
now in the
negative.
next 10
Like
years.
for me, it's
For you, it's not. Yeah.
because
but,
it
but
was
as in, it could be.
100%.
And you don't have to panic if that happens.
Yeah.
Basically.
Yo, I feel like you're under, somebody's trying to sue you, so you're trying to like make sure that all the terms and conditions are stated verbally.
I do what I can.
Yeah. Would I recommend it to a friend? 100%. If you can start earlier is even better, but definitely have it. And a lot of times what happens is, because of the old school mindset of I need to have owned real estate, I need to have real estate, that's usually, for the common man, that's the only asset that they see. And sometimes you're not able to afford real estate because you don't have the current capital and you're early on in your career, whatever that might be.
Especially with house prices
Exactly.
now.
It's stupid.
There's like back in the day of like our parents and grandparents, like 2 years salary could like buy you a house.
Exactly.
Now
things are a lot more
2
expensive.
years salary will like pay rent for like a month or something.
I mean, it depends on how much you're making, but yeah, I would hope you're making a little bit more than that.
Yeah,
if we're watching videos about stocks. So a real estate asset and stocks today could potentially bring me the same return, but I will probably not invest in real estate maybe for the first like 7-8 years. Stocks, you can really calculate and put in exactly how much you are able to do, which is more tailored in terms of your investment, and the returns in terms of percentage will usually be the same, right? So that would be my recommendation to a friend.
And when you're young, you would probably like want to have your assets a bit more liquid than real estate, because when you're young, like anything could happen. Maybe suddenly you need money to get married. Maybe you want to like do some big career change, move somewhere. So it's going to be tricky if now you have to like sell a house or something,
And I think that's another great point, because stocks are one of those things where it's not like a house, right? Like stocks, you can sell a percentage of your portfolio.
It's not like super illiquid, and it's not super liquid either. It is probably the most liquid asset pretty much, but as in it's not like a bank account that you can immediately spend from it. And at the same time, you don't have to like wait for 6 months for someone to like buy it to liquidate it.
Exactly.
When you're investing a good portion of your income, it's kind of now become like the opposite of spending on credit cards, right? Because credit cards, you're like spending every month to pay for things you don't need, and this you're adding up every month to have a good amount in the end.
Exactly.
When you need to buy something big, for example.
Yeah.
So anyway, that's all for this video. Maybe we'll do a part 2 or something later on when it's been another 1.5 years for you, maybe. Yeah. And don't forget to like and subscribe and let us know your thoughts below. And we'd love to hear your investing journey and if you've started or thinking of starting. And that's all for this video. And
this is our advice.
No, it's not our advice.
It is our advice.
This is part of the entertainment.